Tariffs are like taxes on imported goods. They make those goods more expensive for buyers. Countries use tariffs to protect their own industries or to punish other countries. The US and China are in a trade war. This means they keep putting tariffs on each other's products. In 2025, former US President Donald Trump put big tariffs on goods from China. He said this was to protect American jobs and businesses. China responded by putting its own tariffs on US goods. This back and forth has created a lot of uncertainty in the global economy. These tariffs are a big deal. They affect what people pay for things in both countries. Everything from clothes to electronics could get more expensive. The trade war also hurts businesses that depend on buying and selling goods between the two countries. China responded to Trump's tariffs with a strong message: a 34% tariff on US imports. This means American companies selling goods in China now face a hefty price increase, but China didn't stop there. They also targeted specific US companies. 11 American firms were added to China's unreliable entities list. This list is like a blacklist. Companies on the list have a hard time doing business in China. Additionally, China launched trade investigations into American medical equipment exports, creating more hurdles for US companies. China's actions extend beyond tariffs. They implemented export restrictions on rare earth elements. These elements are crucial for making things like electric car batteries and smartphones. By controlling their export, China can impact a wide range of industries globally. China also targeted American agriculture. They halted chicken imports from 5 major US exporters and stopped buying sorghum from another company. This directly impacts American farmers who rely on these exports. The message is clear: China is willing to use its economic leverage in this trade war. The trade war is making waves in the global economy. The US stock market, a key indicator of economic health, reacted negatively to China's moves. The S&P 500, a major stock market index, dropped significantly. This decline reflects growing investor anxiety about the trade war's impact on corporate profits and global growth. The official responses from both sides highlight the escalating tension. China's finance ministry called Trump's tariffs unilateral bullying, emphasizing the perceived unfairness of the US actions. Meanwhile, Trump, true to form, took to social media to accuse China of panicking. This public back and forth only adds fuel to the fire, making a quick resolution unlikely. Experts believe this trade war could have lasting consequences. They point out that China is in a stronger position now than it was during previous trade disputes. China has been actively diversifying its trading partners and reducing its reliance on the US market. However, the trade war is not without risks for China. The US remains a significant market for Chinese goods. A prolonged trade war could hurt Chinese businesses and slow down its economic growth. The escalating tensions also make it much harder for the two countries to cooperate on other global issues like climate change and nuclear proliferation. The trade war is a lose-lose situation. Both countries will likely suffer economically. Consumers will face higher prices and businesses will face uncertainty and disruption. The trade war highlights the importance of dialogue and cooperation in the globalized economy. Finding a way to de-escalate the situation is crucial for both countries and the world.